Dairy farming is not just an economic activity, it is also a social and nutritional system. Governments intervene in dairying not to run farms, but to reduce risk, stabilize rural livelihoods, and ensure food security. Welcome to Chapter 23, Government Schemes Supporting Dairy Farming in India. Government schemes are often misunderstood. They are support mechanisms, not business models. Their purpose is to reduce entry barriers, lower risk exposure, encourage infrastructure, protect farmers from shocks. A dairy farm must survive without schemes. Schemes should only strengthen it. Dairy policy in India is largely guided by the Department of Animal Husbandry and Dairying. This department does not manage farms. Instead, it designs programs, allocates budgets, coordinates states, sets national priorities. Policy sets direction. Implementation determines outcomes. Many dairy schemes focus on infrastructure. These include milk chilling units, processing facilities, value addition plants, often supported through credit-linked subsidies, interest subvention, institutional financing. Infrastructure helps only when milk supply and management discipline already exist. NDDB plays a technical and advisory role in several dairy development initiatives. Its focus areas include strengthening cooperatives, improving procurement systems, enhancing processing efficiency. NDDB's philosophy is clear. Farmers must remain central to dairy growth. One of the most valuable forms of government support is preventive animal health. Schemes often cover vaccination programs, disease control, artificial insemination, breed improvement. These interventions reduce mortality, improve productivity, stabilize farm economics. Preventive support delivers more value than cash incentives. Livestock insurance schemes aim to protect farmers from animal loss. Typically, they offer subsidized premiums, coverage for productive animals. However, challenges include documentation, valuation disputes, delayed claims. Insurance reduces risk, but it does not eliminate loss. Beyond central programs, state governments run their own dairy schemes. These may include fodder support, milk procurement incentives, loan interest subsidies. Effectiveness varies widely by state. Local awareness and administrative efficiency often decide outcomes more than policy design. Credit remains the backbone of dairy expansion. Institutions like National Bank for Agriculture and Rural Development support dairying indirectly. They refinance dairy loans, support cooperatives, strengthen rural institutions. Banks, not schemes, remain the farmer's primary financial interface. Many farmers fall into predictable traps. Building farms only for subsidies, over-borrowing based on incentives, ignoring operating economics. Schemes are temporary, loans are permanent. A dairy farm must stand on its own numbers. Government schemes are valuable tools, but they are not guarantees. Policies change, budgets change, rules change. Successful dairy farmers verify information, plan conservatively, treat schemes as support, not foundations. This concludes Chapter 23, Government Schemes Supporting Dairy Farming in India from the Seechur Agro Scientific Dairy Farming series. Next, we move to the technology providers behind dairying. Chapter 24, Dairy Machinery Manufacturers and Technology Providers in India. Until then, Policy supports discipline, but never replaces it.